Good evening, Western Standard viewers, and welcome to Hannaford, a weekly politics show. I'm Nigel Hannaford. It is Thursday, January the 23rd, and my guest today is Petar Pejovic, a Calgary-based senior portfolio manager at Wellington Altus Private Wealth Canada. You've been here before. Welcome back to the show, Peter.
Nigel, pleasure to be back on your show again. It should be fun.
I think we're going to talk about Bitcoin. I think it's going to be great.
Yes.
That is, in a moment, we are going to be talking about what President Trump might be doing with Bitcoin, which could change a lot of things for a lot of people if he does it. First, though, a word from our sponsors. This episode of Hannaford is sponsored by New World Precious Metals, based right here in Calgary. Years of inflationary money printing and rising debt have decimated the savings of the average Canadian. Gold and silver are the only currencies that have held their value for thousands of years. Last year saw 30% gains. New World Precious Metals offers unique platforms to help protect and grow your hard-earned wealth with gold and silver. Check them out at newworldpm.com. Peter, let's just say that we all know this much about Bitcoin, that although the price has been all over the place for years, the trend has been going which way?
Up.
Up, right. And there's a finite supply of Bitcoin, so that's likely to go on?
Finite supply, it's fixed at 21 million Bitcoin, and we're not even quite there yet in terms of actual issuance.
Now, Peter, you're telling me that while President Trump is making headlines about increasing defense spending and reasserting the binary nature of sex, over here, off the table, he is quietly creating a U.S. strategic Bitcoin reserve. That sounds like a really big deal. They have an oil reserve, they have a gold reserve. What could a Bitcoin reserve do for them?
Okay, that is true. So this is still in the very early stages. So nothing has happened just yet, but a lot has been talked about this. So President Donald Trump is proposing to create a strategic Bitcoin reserve with the U.S. government to essentially manage their faltering fiscal situation and their rising levels of debt, which currently stands just over $36 trillion. There's actually an act that's being floated through Congress right now. It was floated by Senator Cynthia Lummis, I believe her name was. It's called the Bitcoin Act. And the Bitcoin Act is proposing for the US government to buy 1 million Bitcoin, not $1 million of Bitcoin, but actually 1 million Bitcoin. That's a lot. Over the next 5 years to act as a strategic reserve. Not that dissimilar from, say, the strategic reserve for gold, for oil, and actually other commodities, palladium, and I believe there's maybe about 27 different commodities that the U.S. government does keep as reserve.
Now, if there is a finite supply of Bitcoin, how much does 1 million Bitcoin represent of that total?
A very large amount. And the 21 million is actually a bit deceiving because of that 21 million, the bulk of it is actually not traded. It's just simply being held by who knows who, strategic investors, Satoshi Nakamoto, who knows, and it's just simply not being transacted. And a significant chunk of it has actually been lost, meaning it's there, it exists, but whoever owned it has lost their keys, essentially to their money. So the actual amount that's available for purchase is a lot less than 21 million Bitcoin. So if they're planning on buying 1 million Bitcoin out of a tradable float that, we're not really quite sure what it is, but it's a lot less than 21 million. That's a tall order.
I see.
Yeah.
Now, Bitcoin, I think, in the world of cryptocurrency, it is the fact that there's a finite supply which makes Bitcoin more desirable than some of the other brands.
Yeah, it's one of the things. It's not the only thing that makes Bitcoin unique, but it's certainly a big one. If you think of it this way, we perceive value with dollars, Canadian dollars, US dollars, and so forth. But we can always print more dollars, and we print more dollars every single day. So if you think about it, if something is not scarce and more of it's being created every single day, what is its true value over time? And as we all know, it tends to depreciate. And it does. And the depreciation mechanism we call inflation. Well, that's one way to look at it, is inflation is partly the depreciation that we all experience on our dollars. With Bitcoin, you cannot create any more Bitcoin. There's only 21 million ever to be minted. That's it. Can't create any more. So if somebody holds Bitcoin, or a government holds Bitcoin as a strategic reserve, the propensity for that to go up in value over time far exceeds the propensity of an asset that can be replicated to go up over time. And that's one of the reasons why they want it as a reserve.
So they already have some Bitcoin, I
Yes,
believe.
they do.
So have they been out there buying it?
No.
How do you get Bitcoin?
I don't know the exact number, but I believe it's around $20 billion worth of Bitcoin they already have. And it's not just the US government, other countries around the world also have it. It's typically obtained through seizures. So could be drug dealers, could be people who haven't paid their taxes, perhaps. You know, it's hard to say where they got it or from whom they got it from, but they have been collecting it over the years.
So you're telling me that organized crime is coming to the assistance of the US national debt?
I suppose they're donating some of their proceeds of crime to the government. Yes.
All right.
You know, in a joking manner.
And of course.
Yeah.
So the Americans are going to pursue Bitcoin. Bitcoin is a unique commodity.
Yes.
You can expect that it will, I think, based on what you said, a reasonable person would expect it to go up in price.
And it is a commodity. It has been deemed to be a commodity by the SEC.
So it's going to appreciate.
We believe.
What is the grand plan then? Why are they doing this? Why do they could buy more gold, they could hold more oil, there's a number of things they could do. So why Bitcoin?
So let's kind of walk through this.
There's a little bit of history coming here, I think.
We could get into the history for sure, but let's look at maybe the mechanics first of it. So think of it this way. If you think of the US having $36 trillion in debt, I mean, that sounds like just a massive number, doesn't it?
Yes.
Yeah. So, if one were to say compare it to, let's say, a house purchase even. So if you have a house that's, say, worth $1 million, and say somebody had to borrow $1 million to buy that house, most people will consider that fairly risky, because the house does not have to drop much at all, or for that borrower to be underwater, where effectively the value of their asset is less than the value of their loan, and that puts the loan into some obvious financial peril. Conversely, somebody who owns $1 million house, but they only have a $100,000 mortgage, well, that doesn't seem like such a big deal. I mean, at the end of the day, you have $1 million asset, $100,000 mortgage. Worst case, sell the house, pay off the mortgage. There's no problem. So the thinking is similar on this account. So if you have this $36 trillion debt, and if you have little reserves, or reserves backing that debt that are not necessarily growing all that fast, then you have this growing debt, but the reserves are not growing commensurate with the debt. So that puts them in a worse and worse fiscal position. But what if those reserves were something like a Bitcoin? And what if that Bitcoin were to grow greatly over the next 10, 20, 30 years? And what if that Bitcoin were to grow at the same rate of growth of the debt, such that the reserve is growing commensurate with the debt? And if that happens, then all of a sudden the debt doesn't seem so bad. Or even better, what if the Bitcoin actually were to grow faster than the debt, and you have this faster growing reserve asset versus a slower growing debt? Theoretically, at some point, it's possible that the value of that reserve could even match the value of the debt, which would render it nothing.
Yes,
essentially. So that's why they're doing it. They're doing it as a means to make their debt level not look so big.
Can this work?
It can. However, there are tremendous obstacles and conflict, if you want to call it, in making this happen. First of all, with any action by any government, there's always seems to be winners and losers in that, and this is really no different. Certainly, holders of cryptocurrencies, Bitcoin, people who are involved in their businesses in the crypto sphere, if you want to call it that, could benefit tremendously. The U.S. government could benefit tremendously. However, there may be entities that might be serious losers in this endeavor, and we don't even know fully who that may be because we haven't fully hashed all this out. But for instance, it is possible that certain commercial banks may be opposed to this, as it may hurt certain significant parts of their business. It's also likely possible that if this were to work, this may put other countries who are not doing it in some state of disadvantage versus the U.S., which could create tensions on that side too as well. So there's a lot of, and of course, because of all that, this may not pass Congress. It may not pass the appropriate legal channels. Like I said, there's legislation that's being floated around right now, which may or may not pass. So those would be some of the primary obstacles.
It's a fascinating prospect. I cannot imagine why an American legislator of either party, unless they were deeply embedded in private interests outside, wouldn't want this to work in the way that you have described it. Apart from the fact that Senator so-and-so might actually be getting his campaign contributions from an affected party, which we all understand how that works. Are there any other solid reasons why this might not be a good idea?
To touch on your first point, you know, when you look at the Biden administration, they were vehemently opposed to this. They went through great lengths, actually, to not only suppress the price of Bitcoin, Bitcoin's ascent over their term, but they even went to the lengths of essentially, and this is now coming out in the news slowly, going after you know, owners of businesses or CEOs of companies that were involved in cryptocurrencies, and basically trying to make life very difficult for them, which may include things like debanking them, you know, audits, so to speak, with the intent to, you know, possibly dissuade them from going down certain paths. So for whatever reason, and for whatever the reasons may be, the Biden administration was very much against the proliferation of cryptocurrencies.
Well, that actually is a point I don't want to skate over.
Mhm.
They could have been against it for ideological reasons,
Could be.
or for reasons of self-interest. But what else could it be?
Well, I mean, it could be something simple. You know, I painted a possible picture here of something that may seem nefarious. It may have not been nefarious. It could be something as simple as a lack of understanding. I mean, let's face it, cryptocurrencies, blockchain, Bitcoin, it's complicated. For someone to truly understand this, they have to, you know, really immerse themselves and read books, learn a lot, and in people's, you know, busy schedules, and that includes the schedules of senators and Congress people. They may have just not done that. So it literally could be as simple as Bitcoin is a crackpot idea. It doesn't belong in government or in the U.S. financial system. Move on to the next thing. Could. Yeah.
But obviously, Trump is totally seized with the idea. I believe that he and Melania have issued their own Bitcoin. What do you hear about that?
Not too much. I have no involvement, nor do I want to, in any of these meme coins, as they're called.
Meme coins.
Meme
coins.
M-E-M-E.
Okay.
I mean, literally, these are highly speculative assets that have very little to no use case scenario, that are there essentially to speculate on. And it's almost actually too bad, because I think the news surrounding those meme coins probably takes away from people's eyeballs to focus on something that's a little more constructive, and say learning about blockchain technology in general, and some of the more secure cryptocurrency assets like Bitcoin.
When you talk about meme coins, that one with the dog.
Doge.
Everybody knew about the dog, and when the dog died, it was a headline around the world.
Yeah.
So, but
Elon Musk.
in a way, that kind of shows how easy it is to lose the track on
Sure.
on this whole thing.
Yeah.
And the track, if I am fully appreciating what you're saying, is that Bitcoin has and I'm not a paid spokesman for Bitcoin. I don't get commission. I'm trying to understand here. Bitcoin, because it's a finite supply, and especially if it is adopted by the U.S. as a standard,
Yes.
is going to appreciate substantially.
Uh, that would be
The others may or may not.
correct. I'd be very much in agreement with you on that. And it's not just that it's finite supply; it's also decentralized. Decentralized meaning that nobody owns it, nobody controls it.
Mhm.
Its record is updated every 10 minutes on the blockchain,
Mhm.
and basically millions of computers around the world every 10 minutes have to agree on Bitcoin's integrity. So it makes it highly secure, very difficult. Well, so far it's never been hacked. Like some say it's impossible to be hacked, although I hate to use that word impossible. But it's got properties, very unique properties that make it scarce, highly secure,
Mhm.
a very good store of value, which would give it properties to actually be a reserve currency if people were to take a stronger look at it.
So about 10, 15 years ago, Judy and I were back east. We were working in Ottawa, as you know, and we decided to do a side trip into New England, and we ended up at Bretton Woods.
Okay. Yeah.
And I didn't really know what to expect, but I said, Judy, this is where they did the big deal that set up the dollar for decades.
1944.
Yes. And so we've got to go and have a look. And sure enough, when you go in there, there are various mementos and memorabilia and things under glass and black and white photographs of Roosevelt and Churchill and so, this is now a museum, isn't it? This doesn't represent the start of what we're into now. What happened?
No, so I didn't know you went there. Actually, that's pretty interesting. I've never been there.
Kiss the sacred ground.
Yeah, I'd like to go. Just a quick little history lesson on this. So the old gold standard was established at Bretton Woods in 1944, where there was convertibility of the U.S. dollar into gold at a partial level, not a full level. But that gave the U.S. dollar strength and stability through the late 40s, 50s, 60s. But then obviously Vietnam War happened, monetary inflation happened, which essentially created instability and the notion that maybe there wasn't quite enough gold backing all the money that was actually being created. To that effect, some countries got upset. Charles de Gaulle of France famously got upset, and in August of 1971 sailed a warship, over to New York Harbor and basically asked for all his gold back.
And did they give it to him?
No. Yeah. And then a week or two later, basically Nixon, came on TV and suspended the convertibility of the dollars into gold, ending that past agreement, which then created more initial instability, but then also created opportunities for essentially unfettered access to capital that was not constrained by a physical asset.
A lot of people would say that was a good thing.
In many ways it was. I mean, there's a lot of people that say it was a bad thing, but the reality of it is, and this is speaking as someone who was born in Eastern Europe. In Eastern Europe, if you wanted to build something, make something, say a bridge, say for example, you had to go find the money to get it. You're not able to just necessarily print it or borrow it. You have to find it and then go build that bridge. Not so in the Western world. And we noticed that when we moved to Canada was, you needed to build a bridge. Well, just, issue bonds, print the money and build the bridge. So we were able to do things that were previously not possible because we unconstrained the dollar from gold. It also created inflation, though, so that was a problem. A lot of boom and bust cycles. So, and that was a problem. So what Nixon and Kissinger did shortly thereafter was they created a deal with the Saudi Arabians in 1974, creating what is now known as what was known as the petrodollar. And that's simply a mechanism where, if anybody in the world wanted to buy oil from OPEC, they first had to buy US dollars. Then those US dollars were used to buy oil, which created demand for US dollars. And then OPEC would receive those US dollars for exported oil, and then they would take those US dollars and recycle them back into the US Treasury system by buying US Treasury bonds, hence completing the loop of money creation sent overseas back into Treasury bonds, supporting the issuance of US dollar debt.
But
Like all good things, and it was a good thing in many respects, all good things come to an end. And the Saudi Arabians just last year decided not to renew the petrodollar agreement. And there was good reason for that, actually, because it was already falling apart. For years and years, again, you could only buy oil with dollars. But in the last few years, you can start buying oil with RMB or gold, because other countries like China, for example, just said, you know what, we're not having this, and we're going to be able to sell oil in RMB. So it was falling apart anyways. But the Saudis did end it, which now creates a problem in terms of who buys the U.S. debt.
And Bitcoin may be part of the solution.
Yeah, no, it could be. So that's kind of part two. So part one was the Bitcoin Act, which proposes to create a reserve out of Bitcoin. Part two is actually the Loomis-Gillibrand Payment Stablecoin Act, which is also being floated through Congress right now. And that the idea of that is all stablecoins that are based in U.S. dollars. I'll explain what a stablecoin is in a minute. Must now keep their dollar reserves in U.S. Treasury bonds. So what's a stablecoin? So stablecoin is, like, say you wanted to start buying Bitcoin, and you open up an account at, say, one of the major Bitcoin brokers like Coinbase. You maybe send them some money. So whatever amount of money you'd like to send them, you send it to them. So where does that money initially go? Because it doesn't buy Bitcoin immediately. It only buys Bitcoin once you decide to buy Bitcoin or any other cryptocurrency. Initially, it goes into something called a stablecoin, which is just simply US dollars. It's simply a cryptocurrency that holds nothing but US dollars. Think of it like a money market fund almost. Historically, those stablecoins just took those dollars and put them on deposit at banks, commercial banks around the United States. But now they're being potentially directed that they must buy US Treasury bonds. And as Bitcoin grows in value, stablecoin market grows in value, and currently it's about $200 billion in size, but it can grow much, much, much bigger. So conceivably, if you have a situation where, say, Bitcoin grows to some very large market capitalization, stablecoins could grow to $1 trillion, $2 trillion, $10 trillion, who knows what the limits are, and they would be buying treasury bonds with all that money, essentially replacing the demand that we previously had from the petrodollar. Wow. And giving the US a perpetual buyer of their newly issued debt. That's the plan. Will it work?
Peter, we're just about out of time, and that's a good note to go out on with one last question.
Yes.
I know you like gold. What are you telling your investors about this?
Yeah, so again, everything that we talked about today is all things that are being proposed. It's still highly speculative at this point in time because we don't know for sure what's going to happen. But it's certainly ideas that are being floated around, and we see them in these acts that have been produced. So for investors, and again, every investor has different risk tolerance. They have different goals. So this does not apply to everybody. But let's just say you're a typical investor with a medium risk tolerance and above. So you can tolerate some risk at least. So a well-rounded portfolio that has growth equities inside them that invest in innovation. So companies that are investing in innovation and productivity growth, mixed with gold. I know your sponsor today, was a gold company. Absolutely. We are firm believers that portfolios should hedge the risk in their equity portfolio with holdings in gold, but also some Bitcoin too as well. Because if this goes through, if this happens, probably going to want to own some Bitcoin. It's just a thought. And then for liquidity and just rounding out a portfolio purposes, have a liquidity sleeve where you have some cash and or government bonds or fixed income securities, just in case there's a rainy day coming up.
Sounds like great advice from Wellington Altus. Always
Thank
a
you.
pleasure, Peter. Thank you so much for coming in to see
You're
us.
welcome. Thanks, Nigel.
For the Western Standard, I'm Nigel Hannaford.